Cryptocurrencies have gone from an intricate part of finance to center stage over the last year. In the space of 12 months, Bitcoin has exploded from trading at $8,166 on 8th of March 2020 to an all-time highs of over $58,000 in February 2021, and now trading at a much higher price. There are hundreds of other cryptocurrencies around the world, but the core group of 20 coins constitutes around 99% of the market volume according to crypto websites. Welcome back to CryptoGeeks. In today's video, we will be looking into the evolution of cryptocurrencies. But before we get started, make sure to smash the subscribe button for your chance to win our monthly giveaway. Just comment down below, "I subbed," and you will be entered in the crypto giveaway. Check our About to find out what this month's giveaway is. Let's get started. Cryptocurrency, not as we know it now, existed as a theoretical concept long before the first digital alternative currencies debuted. Early cryptocurrency enthusiasts shared the goal of applying cutting-edge mathematical and computer science principles to solve what they considered a practical and political shortcomings of traditional fiat currencies. Cryptocurrency's technical foundations date back to the early 1980s when American cryptographer David Chaum invented an algorithm that still remains central to modern web-based encryption. The algorithm allowed secure, unalterable information exchanges between parties, laying the foundation for future electronic currency transfers. It was called blinded money. By the end of the decade, Chaum enlisted a handful of other cryptocurrency enthusiasts to commercialize the concept of blinded money. After moving to the Netherlands, he founded DigiCash, a for-profit company that produces units of currencies based on the blinding algorithm. Unlike Bitcoin and most other modern cryptocurrencies, the control of DigiCash weren't decentralized. Chaum's company had a monopoly on supply control, similar to central banks on fiat currencies. DigiCash initially dealt directly with individuals, but the Netherlands Central Bank rejected this idea. Faced with an ultimatum, DigiCash agreed to sell only to licensed banks, seriously diminishing its market potential. Microsoft later approached DigiCash about potentially profitable partnership that would have permitted early Windows users to make purchase in its currency. But the two companies couldn't agree on terms, and DigiCash went bankrupt in the late 1990s. Around this time, a proficient software engineer named Wei Dai published a paper on B-Money, a virtual currency structure that included many of the basic components of modern cryptocurrencies, such as complex anonymity protection and decentralization. Shortly after that, an associate of Chaum named Nick Szabo developed and released a cryptocurrency called BitGold, which was now renowned for using the blockchain system that forms the base of most modern cryptocurrencies. Like DigiCash, BitGold never gained popular traction and is no longer used as a means of exchange. After DigiCash, most of the research and investment in electronic financial transactions shifted towards more conventional, though digital intermediaries such as PayPal, a handful of similar technologies as of DigiCash. In the United States, the most striking virtual currency of the late 1990s and 2000s was known as eGold. It was created and controlled by a Florida-based company with the same name, eGold. The company primarily functioned as a digital gold buyer. Its customers sent their gold jewelry, trinkets, and coins to the eGold's warehouse, receiving digital eGold and units of currency denominated in ounce of gold. eGold users then could trade their holdings with other users, cash in exchange for physical gold, or exchange their eGold for US dollars. At its peak in the mid-2000s, eGold had millions of active accounts and handled billions of dollars in transactions annually. Unfortunately, eGold's relatively sloppy security protocols made it a popular target for hackers and phishing scammers, leaving its users vulnerable to financial losses. And by the mid-2000s, much of eGold's transaction activity was legally questionable, and its laid-back legal compliance policies made it attractive to money laundering operations and other small-scale schemes. The platform faced growing pressure legally during the mid and late 2000s and finally stopped operating in 2009. Bitcoin is popularly considered as the first modern cryptocurrency, the first publicly used means of exchange to combine decentralized control, user anonymity, record-keeping via a blockchain, and built-in scarcity. It was first proposed in a 2008 paper published by Satoshi Nakamoto, a pseudonymous person or group. In early 2009, Nakamoto issued Bitcoin to the public. and a group of enthusiastic followers and supporters began exchanging and mining the currency. By late 2010, the first of what would ultimately be similar to cryptocurrencies, including popular alternatives like Litecoin, began emerging. The first public exchanges of Bitcoin appeared around this time as well. As Bitcoin increased in popularity and the idea of decentralized and encrypted currencies caught on, the first alternative cryptocurrencies appeared by 2011. These alternatives are also known as altcoins and generally try to improve on the original Bitcoin design by offering greater speed, anonymity, or some other advantages. Among the first few to emerge were Namecoin and Litecoin. Namecoin was announced with a mandate that read quite differently from that of Bitcoin. Compared to many identical altcoins that sprung up in the months to follow, Namecoin started its life with novel intentions. Namecoin's goal of working as a decentralized domain registration system may have been slightly inspired by Satoshi's own experience of purchasing the bitcoin.org domain in 2008. He was forced to use anonymousspeech.com, a website that enables services to be acquired using gift cards. Today, Namecoin is more of a dead coin, despite it still being listed on Poloniex and Livecoin platforms. In its 7-year history, Namecoin has had its moments of glory. Litecoin was invented by a former Google employee, Charlie Lee. It was designed with a very specific mission in mind, which is to be a peer-to-peer internet currency that enables instant, nearly zero-cost payments around the world. It was also created to support Bitcoin's aim to solve the world's growing and complex payment needs. And it's with this forward-thinking and unique approach that helped Litecoin get into the mainstream, but only after a few starting problems. Bugs troubled the network for a while, which caused a huge roadblock to improvement and affected the trust of the Litecoin community. But all this changed in November 2013 when Litecoin version 0.8.5.1 was made public. The Litecoin digital asset reached $1 billion in market cap by 2013, which is just 2 years after being officially launched. By the end of 2012, WordPress became the first major merchant to accept payments in Bitcoin. Others including Neweggs.com, which is an online electronics retailer, Expedia, and Microsoft followed. Dozens of people now view the world's most popular cryptocurrency as a legitimate payment method, and new cryptocurrency applications take root with remarkable frequency. Though few cryptocurrencies other than Bitcoin are universally accepted for merchant payments, increasingly active exchanges allow holders to exchange their term for Bitcoin or fiat currencies and allowing better liquidity and flexibility. Since the late 2010s, big businesses and institutional investors have closely watched the crypto space too. The interest in crypto was ignited after the 2008 financial crisis, as people lost faith in the existing financial infrastructure. During the midst of recovery, our economy has taken yet another blow because of the current COVID-19 pandemic situation. And at this point, our traditional currencies are becoming worthless. Today, our money has value because our government tells us so. But since the 1970s, the US dollar, which is the world's reserve currency, is not backed by gold or anything of intrinsic value. Based on this and the current rate of technological advancements, businesses and individuals are adapting, and fintech firms which have already begun to access new technologies which rely on blockchain in order to stay ahead in this competition. While most authorities are imposing regulations on cryptocurrency, they recognize that they cannot stop the progress since the market and tech are always changing. This could mean that we will see blockchain and cryptocurrency become common and in wide use within the next 5 to 10 years. That's it about the evolution of crypto. Thank you for watching. Tell us in the comments if you think we missed anything. Drop a like if you learned something new from this video. Make sure to subscribe to see more such content from us. Press the bell icon to never miss a video from us. We'll see you soon.